Recording in progress. Sunny D,
Good morning.
how we doing?
I'm good. How are you?
Good.
Good, man. Good. Ugh. What up, Dom?
Yeah, what's on, bud? Oh,
All right, Dommy.
oh. I mean, mate, last 2 days were a bit shit. I fucking started spewing in that, mate. So my training, I fucking tried to go training this morning. I'm getting a bit better now. But I got to Thursday, mate. Done that analysis Friday, and I thought, dude, now Thursday morning, I just thought, do you know what, mate? I was having a shit day at work. I just thought, fuck training for the rest of the week. I can't be bothered. But yeah, mate. Do you know what, mate? I know it's not. I'm still not got into some trades. Or I missed them. But I keep every week. I'm slowly feeling a bit like confident, or
Good.
like confident. But I'm just mate. My analysis is right. I'm just obviously missing the entries when I'm working in ice,
Yeah.
so it's a hard one to get over. But
Well, look, I just recorded. I was doing a load of journaling myself. I just recorded a 20-minute session. And yeah, everyone, chart, yeah. Um, yeah, I just did a journaling session, and I'm going through. I don't think you're ever done with the learning process. It's quite interesting that, I had a good string of wins on EURUSD recently, and then there were a couple of trades in there that basically, as I'm doing my journal, just didn't meet my checklist. So it's just so important. And I had obviously I've just posted the chart in the chat. I had oh, actually, I'll share my screen for easier. Yeah, I had like a massive backlog since like end of January. I hadn't done any journaling on EU. I've been journaling my other pairs, but EU had just kept building up, building up, building up. So I had a massive backlog, and I had 11 trades on there that I hadn't journaled, and I've just done it all, and it took me 22 minutes. So average of 2 minutes per trade to journal it, which is nothing really when you think about it. But when I was going through it, the two trades that had lost were the two trades that didn't meet my checklist. One of them didn't have a shift. And the other one only had like two of my checklist points met out of the six, and all the other trades that were good trades had all six of my checklist points met. So it's just such an important process. It's like what it does is it really like solidifies and reminds you of why you have those checkpoints, those checklist points in place. Why are you wanting to meet those criteria. I was going through it today and I was like, that makes sense, that makes sense. Whereas, funny enough, at the time I'm going through it and you just, I don't know, there's something about, I was never a big fan of journaling, and that's because a lot of the journaling processes were very like, you've got to talk about your emotions and, you've got to say
yeah,
what you have for breakfast and, all that nonsense. And it's just like, I had no time for that. So I'm really like, and I've really tried to like streamline like the processes. And, I think there's,
mate. Sorry,
if you
mate.
think about it this way, right? Most of the traders out there, and even the ones that you get mentoring from, okay? Most of the traders out there aren't making any money, okay? They are doing whatever they're doing because it's a platform for them to get their name out there, or whatever it may be. It doesn't really matter, okay? So all of the processes that you like, the one that really sticks out in my head all the time is people going on about psychology, being like, you got to master your psychology, man, and you got to, focus on your psychology. And it's just like, if I said to you now, Danny, I want you to focus on your psychology this weekend, please. Would you like? Do you know what I mean? It's like a nonsensical thing. It's like somebody saying to you, right, I really want you to focus on your blood pumping around your body. Okay, it's not something you can work on physically. Like it is psychology, and therefore negative behaviors and poor reactions to outcomes are exactly that, right? They're reactions. And so when you break down how to master your psychology, what those psychology books are telling you is what you've got to do is you've got to change the way you feel about something. That's like, when like I always use this example, and this always sticks out in my head. Do you remember when like you were with that girl that you shouldn't have been with, right? and you were growing up, right? And you've probably had the situation where you're with some chick that you shouldn't have been with, and she was just a wrong one. Okay, I've had a few, and you chase this bird, right? And she keeps fucking you over, or like going off with like someone you know, or we've all had those relationships, right? And your mates are going, mate, she's a fucking scat. Like, you need to stay away from her. Like, she's no good for you. Like we're gonna take you out this weekend, boys' night out. And no matter what you do, no matter what you are told, you always end up messaging that bird, calling that bird next week, go around and see her, right? Okay, you've all had those relationships, I'm sure. Okay, that's the same principle as someone saying to you, you need to change your psychology. Okay. You can't change your psychology. It's just the way you're built is the way that you're built. And the only way that you'll get over that bird is by getting hurt enough times. Okay. Getting hurt enough times so that you finally decide, right, I'm not putting myself through that pain anymore. And that's exactly the same process with psychology. It's why I hate all these traders going on about mastery and psychology. It's not something you can just click your fingers with. It's not something that you can fix. It's it's a reaction to a series of events.
It's
So
just life, isn't it, in general, really?
exactly, right?
Yeah.
Yeah, exactly. It's a reaction to a series of events. So what I did with my own trading, I was like, right, okay, well, why do I feel shit about trading? What am I doing wrong? How do I fix that? And that's where a lot of the processes that you guys are now being taught have come from. So the reason why the journal is so simple is because the only point in the journal, in my opinion, is to acknowledge where you're going right and where you're going wrong. And in doing so, that's why the checklist is so important and the strategy tester is so important. In doing so, what it will cause is positive reactions. The outcome of those positive reactions, because you are reinforcing good behaviors and you are vilifying bad behaviors, the outcome of that is that gradually your confidence improves and therefore your psychology towards trading can improve alongside it. But your psychology is an emotional state, okay? And that is a reaction to a series of events. So going out there and saying, right, I'm going to work on my psychology this weekend, that just doesn't make sense and it doesn't work and it's impossible. But you go to every other Instagram post, then it's like, you've got to master your psychology. You've got to read Trading in the Zone by Mark Douglas, which was probably 6 hours of my life I will never get back again. What a waste of time that book is. Has anyone read Trading in the Zone?
Nah, but what is it, mate? 'Cause I fucking hear it so
It's
much. I'm
the
like, oh, it's
psychology
changed my
book.
life, mate. It's changed. Nah, it's not changed your life, mate. You've just
No.
been practicing. Do you know what I mean?
No, it's just like people talk about it for clout because you know when like it gets lost in its own hype almost. It's like people talk about it, so like you need to be on trend and you need to have read it, and you know you come out. I came out of it and I was like, what? I was like, there's some good stuff in there. There's some good stuff in there. There's some good concepts. Like there's some good bits about risk management and take profit scales and things like that. So there are definitely some good things in there. But the whole like it will change your trading career. Nah, I mean, look, I'm not going to say don't read it because obviously it's there is some good stuff in there, but don't expect to read Trading in the Zone and to be immediately like a profitable trader. Like the thing that people go on about with Trading in the Zone is the he talks about like you need to when you take a trade, you need to accept that it's a loss already. And so basically you go into every trade feeling like you've lost that money, i.e., you risk what you can afford to risk, and you go into the trade with the expectation that the trade is already lost, that money is already gone. So if it does end up hitting your stop loss, you don't feel any worse about that. But if it does hit your profit, it feels like you've had a win.
Isn't that shit way of looking at it, though? 'Cause it's a bit like not like gambling, but instead you're choosing you already lost, so you're just like, oh yeah, fuck yeah, I've lost in it. Do you know what I mean?
You also can't change that. You can't change the way you emote. You can't say to yourself, right, do you know what? I'm just going to be okay with the fact that there are murders in the world tomorrow. I'm just going to be okay with it. It doesn't make sense. You can't change your emotions. Your emotions and your feelings are built from years and years of repetition of various social factors and experiences that you've had. You can't change that. And experience is the really important thing, which is why I'm so big on data, because experience is what's going to build confidence. You've got a good strategy, you already have that. Okay, experience is going to build that skill set, okay? And the data that you collect in all your journaling processes, end of week markups, end of day markups, that's ultimately going to build the confidence. And all of that together, that's what we call that. And you've probably seen that diagram, the strong money Forex flower of life, as I call it. That little Venn diagram where you've got data, experience, and strategy. And the combination of those three things is what's going to make you successful as a trader. So
Mate, it's funny you say that because obviously my one at the minute has been my ranges, mate, and they're getting better. But what I've noticed is like when you lose a trade and then you're like, oh fuck it, you just sort of try to stay away from it. But last week, obviously, even though I didn't trade, mate, I kept doing my ranges, and now I'm feeling like I'm getting them better, if that makes sense,
yeah,
because I'm sticking with the strategy as well. Like before, I would have switched strategies, but I'd be like, oh, no, this guy's
yeah,
talking shit. Because obviously I've seen it works and that. So now
yeah.
I think it's just a matter of like as well on a shit position because of work. But for me, it's just keep doing it.
Mate,
Because
and that's all it
yeah,
is.
bang, yeah, right.
It's experience and data, and your brain, remember, is the best data collector. Like the journals and
I got to start my
the
journal again.
sheets
That's
that
really
we
what.
use to complete and the Discord that we post things in. That's a way of you collecting physical data. But your brain box, is the best data collector around. That's what's going to it's the combination of those two. The reason why I give you guys a journal and I give you these things to fill out is because it forces learning. Okay, it's the same reason why when you were sat in class, when you were at school, you just sitting there. Like, did you learn anything just sitting listening to the teacher?
No, I was a
No.
class mate,
What
so
what would they make you do to make sure that you learned it
homework.
during class?
Oh, during class, don't know, mate. 'Cause I got detentions. Nah, no. I suppose you have books and that, or like you do some what we're doing. Some of
You
our
have to
class,
write things down, right?
physical
Fill in
stuff,
your
not
exercise
physical,
book,
but
innit?
Exactly. Fill in your exercise book, write down what the teacher's saying, and then practical tests, right? The learning that you guys are going through is the same kind of basic kind of learning processes. You sitting here listening to me is not enough. You've got to be making notes. You've got to be drawing diagrams. You've got to be doing your journals. Look, all of this work is the combination. What I call the 1% tweaks is the combination of those things that's going to make you good. And you mentioned about the ranges, Dom, and that it's a really good example because ranges are sometimes complicated to get your head around. They seem like the simplest thing in the world, right? They seem so simple, but actually getting your head around them, when to use them, when not to use them, when to see that they're shifted, when to see that they're swept, all that stuff is confusing and it takes some experience. It's exactly the same as when you learn how to drive the digger, okay? You know what lever does what, you know how to make the digger work, but the first few times you're driving it, you feel like you don't know what you're doing, right?
yeah, mate. Easiest way I could put it is like like the little details. So like, if you miss a little detail, you end up getting like do your range later or something, and then you might miss the move because you've done your. Do you know what I mean? It's like the tiniest little details. If
Yeah.
you're not paying attention to the little details, mate, you're already away from where you should. Like,
Yeah.
do you know what I mean? And
And do
that's
you know what?
what my problem was.
That's often the difficulty with trading liquidity concepts is because sometimes you might miss a detail and make a mistake, and that then messes up your idea or your trade or whatever it may be. Sometimes you might get it perfect, but the market just does what the market does, and you've done nothing wrong, but you come out of it scratching your head being like, what have I done wrong here? And that's why posting in your chat is so important so I can analyze it because I've got the experience, I've got the data, I've got the success where I can lead you guys along the right path, right? That's why these analysis channels are so important because I can then help you, okay, make sure you are right because the difficulty with trading is that remember, let's say you've got a good win rate of 60%. Your trades, you might take 10 perfect trades and 4 of those 10 trades are still going to fail and you've done nothing wrong. And the difficulty with trading is that you look at those trades and you try and find problems, don't you? Sometimes you take a trade and it felt like it was a perfect trade at the time and it fails. So you go into them and you try and find the problems in them, right? You try and find what you did wrong. And sometimes you just have to accept that actually you did nothing wrong and it just failed. And
Does
there's
anyone
nothing,
talk themselves out of a trade? I
pardon?
always find, does anyone ever find they talk themselves out of a trade sometimes? Because
Yeah.
mate, I fuck it. It's one of the things I just I don't know. I just do sometimes. I start talking to myself and then I talk myself out of a trade.
Yeah.
If I
I go
yeah,
through, so I don't often talk myself out of trades, but I go through phases where if I've had like a tough week or maybe I'm coming close to like passing an evaluation or whatever it may be, where I close trades early. and I get panicky about losing. Like if I'm really one of my issues that I've got to work with is if I'm really close to like a profit level, like a profit target, and I've got like 1% to go, and I take a trade and I feel like it's not moving as how I want it to, I'll close it early. You've probably seen in the chat before, me and Sam always gives me shit about it. I'll close the trade early and it'll like plummet like 4 or 5 times my risk. But yeah, because of my checklist and because I know my checklist so well now, I very rarely don't take the trades, but sometimes I don't manage them as well as I should do, really. Anyway, good chat, guys. Does anyone have any questions before I get stuck into the EURUSD end of week markup?
Yeah, Euro GB.
Mhm.
Is that against the GB USD? Because obviously added that one to my chart. If GU goes up, Euro GB tends to go down, doesn't it?
No, other way
No,
around.
I've had that this week. I just wanted to check. So this week, a lot
So
of time GU was going up, Euro GB went down, and then when
yeah,
GB
but
went down,
that's because GBP would have been particularly strong.
oh, that's right. Because I didn't want to start using it as a thing. That, oh yeah,
Yeah,
GU's gone up, so like you do with Dixie and
yeah.
GU. I just
So
wanted to make sure.
if the euro goes up, typically euro GBP will go up because it is the stronger currency of the two. It's
Right,
more internationally used. If GBP is going up and euro USD is ranging, then it will go down.
right.
When you've got,
So I
say,
could place a trade, say if GU looked bullish and Euro GB was bullish, and they're both perfect trades to both take bullish, you could take them bullish and it would be all right. Like not,
um,
or would you be like, nah, don't?
I would try. It's really difficult because
Yeah,
there are times where EU and GU can help you with EG,
yeah,
but I try and just trade it independently of anything else. And just where it can be really good is, let's say GU gets to a liquidity level and just gets stuck at that liquidity level, but EU is, I don't know, 20 pips away from that liquidity level, then you can probably take quite a safe bet that Euro GBP is going to go up because GBP is going to stay still and therefore Euro is going to take over. Okay, that's probably quite a safe bet. The
right,
problem that you have with using EU and GU as confluences for EG is usually EU and GU aren't too much different from each other.
yeah,
Okay, you have weeks like this week where there was quite heavy news for GBP and the Euro, which affected it differently. But other than that, yeah, I just try and trade Euro GBP independently of either of those pairs because you can kind of get a bit lost in it, to be fair. Sean, morning, mate. How are you? Mark, hello. KB, hello.
Morning, guys.
How are we all? Good?
Good, 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 good.
Good. Right, let's get the screen shared. We'll get stuck in
people had
then.
a good week this week, didn't they? By the looks of the results,
So again,
quite a few people had a good week this week, didn't
yeah,
they?
it was a good week. I mean, it was a relatively difficult week to call, to be fair. But yeah, a lot of the lads had a real good week ultimately. Where are we? Monday. Monday. Right, so we're here, aren't we? Yeah, it's a um yeah, a bit of a wacky. Oh my, what's the word I'm looking for? Weekly cycle this week. So there is a clear cycle to the marketplace. I think Danny, you did this, didn't you, yesterday? You drew out your cycle yesterday. There is a clear cycle. If we say that, this effectively is our accumulation here, it's not the cleanest of accumulation because it is pretty bearish from the outset. We've then had, a pretty decent manipulation. I don't really know what liquidity we took over there. I tried to find this the other day. I didn't really see much. There wasn't a 4 hour liquidity. There definitely wasn't a daily liquidity, obviously. We didn't even really have I mean, you've got that liquidity low there. Now, the only thing I can think, and this is sometimes what you've got to watch out for, is if you have big news spikes, in some cases you can kind of ignore them. Because if you think about someone tell me, what is a news spike?
It's just essentially a liquidity grab.
Yeah, it's a liquidity grab. Does it take a lot of money to create them or not much money?
I don't know, mate. I'm not
I would
now.
say it takes a lot.
Takes a lot of money, correct? Does it move quickly or does it move slowly?
Quickly.
Quickly, right? So how much time does it give institutions and traders, the dumb money, how much time does it give them to react?
Not a lot.
Not a lot, which means there's typically not, if you think about it from a physical aspect of taking a trade, okay, A new sweep like that has served a purpose, right? Okay, the sweep has served a purpose. It's grabbed that liquidity down there. Okay, because it returns so quickly, the opportunity for people to get into there, if you again think about it from an institutional level, what's ultimately happened is the market has swept down, it's grabbed the liquidity that it needed to. The institutional input would have been orders placed at those levels. Those orders have been executed, and then the market has immediately returned. So the volume of trading that would have been able to react quick enough and place a logical stop loss below here is probably relatively slim, which is why often Newswicks, they don't get tested. So there was a trade that we took on EU. I'll show you actually, because I've got it in my journal. There was a trade that we took on EU that was a good example of this. And again, this is another, just coming back for those of you who missed it, we spoke about the start of the session. I've just posted a journaling session for you guys. I've just posted a journaling session. I had about 11 trades on EU. I needed a journal. I've just posted that journaling session up. So go and watch that session. It's 20 minutes long, but just go and watch it. I would highly, highly recommend it. Right, it was that trade there. Okay. And it's these sorts of things, these sorts of reasons why we want to review this. Okay, so this is a really good example. I was happy that the chance of us coming back up after structure had shifted, and this is the 5-minute chart. After the structure had shifted, you can see the shift in there. Can't zoom in, unfortunately, but you can see the shift in here. Push, pull back, push. After the structure had shifted, I was pretty confident that the market was unlikely to come back and retest much of this because it served its purpose. Think about it institutionally. It's grabbed a large volume of orders that without the news it wouldn't have normally grabbed. Therefore, we don't need to worry about it coming up too high. Okay. Same principle really with this is that we don't need to worry about the markets coming to retest these wicks. So the only thing I can think that's happened, and look, this wouldn't have been a liquidity point that I would have marked on my chart per se. The only thing that I think has happened is that the volume of orders that were placed where the liquidity was sat was just simply below this 1 hour candle. It's caused a reaction, so we can't really argue with it. You've got a tiny little EPA over there as well. You have got an EPA over there as well, which maybe had a contributing factor. Those of you who've been with me since last year, you'll know the concept of liquidity grading. Okay, sometimes an external liquidity level is obviously your highest likelihood of price returning to a level and tagging a level, etc., etc. Okay, external liquidity, that's where we would have like a good volume of liquidity. Sometimes the market will reverse, and you kind of can't pinpoint why the market has reversed from there. And sometimes you have areas like this where you've got like a weak EPA. So mark that on properly. You've got a weak EPA. You've got a little 1 hour candle. You've probably got some form of like supply or demand zone in there as well that maybe they've tagged on. I don't know, that candle. Maybe, I don't know. And we did a few videos in the past on what we call liquidity grading, which is grading different levels of liquidity. So let's say, for argument's sake, each one of these levels gives you about 30% of the liquidity of an external level. Then a combination of 3 of those can sometimes give you enough liquidity to actually reverse the marketplace. I'll do another session on liquidity grading because it's probably one that we're probably right to have a bit of a recap on. But look, sometimes you won't know, and I say this to you all the time, sometimes it doesn't matter what liquidity the market reverses from, right? It doesn't matter what liquidity we use. What is the most important thing? If the actual liquidity level, as in the specific level that the market reverses from, doesn't matter, what does matter?
The reaction after it.
Exactly. It doesn't, the liquidity level itself is somewhat irrelevant. We need to know which ones we're likely to gravitate towards because then we can set alerts and set targets and things like that. But the actual level that the market reverses from doesn't actually matter that much. What matters is the way that it reacts from the level. Okay, so we did have a distribution here. The reason why it's a bit of a wacky week is because we've technically, if this is our Monday here, we've technically closed bearish for the week, even though there's an argument to say that we are bullish. We had this big distribution which didn't grab any higher liquidity. And then we had a whole Friday of end of play reversals. So it was just a bit of a weird week. And if we look at the weekly candle, look, It was technically a bearish candle. What do you think would be the implication for this? What do you think, looking at that weekly candle, what do you think's next? Sean, I'm going to pick on you.
I would say we're looking for another bullish week because that's quite a bullish candle to me. Is that what you're looking for?
Yeah, and that ultimately is, I think a really astute analysis really is that, sometimes you have to use everything that you can see as your frame of reference. Okay, we trade momentum. That's what we're doing. We're trading the momentum of the marketplace. And last week wasn't a great weekly candle, but the previous 2 weeks were pretty bullish, right? Or you've had like a rejection candle here, so big rejection, but closed bullish. And then you've had this massive, massive bullish candle, like huge bullish candle. And then although this candle closed bearish, we have had this big rejection wick as well. So, for me, I'm looking at thinking, yeah, do you know what? This looks like it's probably going to continue. Now, this is where it can get a little bit spicy, right? Because we don't know what the market is going to do. And we have to react to what the market is doing rather than predict what we think the market will do. So that's where this can get a little bit difficult. But Sean, yeah, I'm completely with you. I think that this is probably a bullish signal. What else do we notice about that weekly candle that is quite important for us?
I was gonna say, well, after I said that wick
Mm-hmm.
looks like it's gone down to like an equilibrium level of that week.
Yeah.
So has that gone down, pulled all that liquidity, and then that's why it's returned back up? So could you say that it's fair to say it's reached some sort of EPA or equilibrium level in that week?
It's found some sort of rebalancing, hasn't it? Probably off this range, okay, which is a positive signal because we've come down. I think Linny quite rightly noticed as well. Was it like a daily EPA? Wasn't
It's
it?
like a 4 hour. If this is your 4 hour range, isn't it? Then
Sorry,
it
mate.
breaks these highs. So it's kind of both of these highs.
Yeah,
It's separate. If you go on a low time frame, it's two, but on a daily, it's kind of one.
yeah.
So it comes into that whole area.
Is
I
this
think you
market
get like
efficient
one.
or inefficient?
Sorry,
Is this market efficient or inefficient right now?
efficient, I
Efficient
would
to me.
say.
Efficient, yeah.
Yeah.
And are we bullish or are we bearish?
Well, bullish
Bullish.
on
Do we have
this
any,
time
therefore,
frame.
do we have any reason to come lower?
Not yet.
Not yet, right? So, these are good market
For that as
conditions
well, right?
ultimately. Yeah, exactly. Another EPA there.
I
This,
like this. This is what I was saying the other day as well. I see how efficient all this was. We were
yeah,
talking about it, and then obviously it's just. I was having the same problem. Where did it react from? But
mm.
when it did react, it just took it all out because it's so efficient.
Well, the market has, created a really nice pullback. Really, like we've had some quite impulsive moves here, really corrective pullback, and then boom, big old. But
Hmm.
sometimes just common sense prevails. Sometimes you just need to look at the charts and be like, what does it look like is happening? Well, it looks like the market's going higher. The other thing as well, if we look at the sentiment, pretty sure the sentiment's pretty level at the moment. Okay, and something's going to happen next week to signal us in either way. Okay, this is when it can be quite difficult, and this is ultimately why the market hasn't really moved that much
Did you
because
see the monthly as well, check? Because last month was like a doji, and we're still
yeah,
inside of that doji.
yeah, and look, we've only got a week's worth of trading left, and a
Yeah.
lot of news next week as well. What I also like about this is it's an inside bar. It's an inside candle. Now, I'm not a big believer in candlestick patterns, but they can assist us. What does an inside bar tell us, or an inside? So this candle is inside the previous week's candle. What does that tell us usually?
Indecision.
Indecision, yeah. What we're therefore probably doing,
Accumulating.
accumulating orders, right? The market's not really moving either way. Accumulating orders. We've got liquidity built up. We probably have some good liquidity down here. Probably got some good liquidity down here. We haven't got any reason to come lower, but I wouldn't be surprised if we did come down, grab some of this, maybe even the low, and then go up higher. Equally, because we can't forecast. We can't say the market is going to do anything for sure. Equally, we could come up, grab some liquidity from here, okay, and then spend the rest of the week coming down to grab this liquidity, then spend the following week going up. Okay, so we don't have to, I think we always put like our frames of reference saying, right, I think this is going to happen in this amount of time. What you predict could happen, but it might take 2 or 3 weeks rather than the few days that you want it to. So it's just something to be aware of. I quite like it if you look at if we look at the weekly chart. Okay, I quite like it when we have these inside bars lit, because when we have these inside bars, we normally have like a big expansive move. Let's try and find another one. Yeah, so you've got, and this is a good example of what I just mentioned there. Inside bar here, inside bar here. Okay, all inside this big candle, and then we get a big push up. Then you have this other weak candle, big push up. Weak candle, big push up. So, it might take a couple of weeks. It might stay at this level for a couple of weeks, but we should have a nice expansion somewhere in the not so distant future. And by the looks of it, that looks like that might be going bullish. It's certainly bullish for now on the hourly time frame. So we can't argue with that bullish momentum until we have this happen on the hourly time frame. It's just as simple as that. Anyway, let's get stuck in. Let's have a look at some of the entries. Let's see what we can find. And yeah, so let's get rid of all of this. Get rid of all of this. Actually, I'll leave that on. Okay, so Monday came in, and we had quite a nice 15-minute shift. So this is our 15-minute range. I'm just going to delete this higher time frame range because it's a little bit easier. This is our 15-minute range. We then had this first break, and we had this true break. Now, personally, I wouldn't have taken any positions here. I know there are positions here, and I know that some of you caught positions like this, but for me, when I'm in this 15-minute range, that for me would be too low for me to be consciously getting into a trade where I'll be honest, I'd be really happy to get into that sort of position. I'd want to see some structure coming down here to really start breaking these levels. You get your larger first break here, and then you get so that would be there. You get your larger first break there. So that's the range broken. And then you get your actual true break down there. So that for me is where this is effectively an IFB because it's internal to that range. And this is therefore an ITB because it's internal to that 15-minute range. There's definitely a trade in there. You can see it very, very clearly. Let's mark it up just so, we kind of cover all basis. Let's have a look. How could we have got into that? You'd have it to be really early on a Monday there. I definitely wouldn't have taken that trade. You then have a breakdown. This is one of those examples where, Sean and I were discussing this earlier in the week. This is one of those examples where we're outside of our window. We're just about to hit New York Open. We're outside of what I would class as a key trading window. But as you can see, there is definitely a valid setup in there. Okay, MSU. Really lovely MSU, actually, to be fair. Let's use the MSU2. We would need to use the MSU2 to be fair. In fact, I don't know whether I could have taken that trade. Just not enough room in it for me. There's not enough room in that for me. That would be the only trade that personally I see. Let's see if we've got anything better on the 1 minute. If you traded this engulfing instead, you would have had a nice position and you would have got 2R out at the bottom of the trap probably. Yeah, so there is a trade there. There is a trade there for sure. But when sometimes you're looking at the markets and you're trying to find a way to get into it, and this is why these end of week and end of day markets are so important. If you're ever sitting doing your end of day or end of week markups and you're trying to find a way to get into a trade, what does that probably tell you?
Probably not a trade.
Probably not a trade, right?
Mm-hmm.
And you're more or less saying to yourself, I'm going to struggle to catch this trade in live market conditions. Okay, this is a trade that's going to be difficult for me to get into. Okay. I don't really think we have anything on Tuesday either. You've got really shit structure. Nothing's really happening. You finally get your breakdown down here. You would probably ended up getting if you had taken a trade like that, you'd probably end up having a loss there. You get a really weak pullback. Then you have a manipulation. No real way to get into that one. Just a risk entry, really. Obviously, you've got a trap down here, which you can see blows. And you know what? Sometimes, and this is the hardest thing about what I would class as professional trading, right? Don't know why I did inverted commas because it is professional trading. Sometimes the markets are moving and there's just no way to safely get in. Like there's this is your 5 minute range or whatever it may be, 3 minute range. There's just no way to get into that. And sometimes that just happens and it is fucking frustrating. And again, it's where you end the week market and the day markets will come in because you can then take a step back and be like, do you know what? Yeah, the market moved. I don't need to kick myself for that because I couldn't really find anything. And I'll be honest, I didn't find a huge amount on EU last week. There wasn't a huge amount other than this trade here. There wasn't a huge amount that could have been traded. So this trade was probably the only good trade of the week that I found. You had a bit of a weak liquidity point, but remember the liquidity point itself isn't, or the be all and end all. It was a 5 minute liquidity point. It's very weak. I probably wouldn't have even marked it on as one of my liquidities. You've got another one there as well. So possibly the combination of both of those things are the reason why we had, that reaction. We did, however, and this was what was quite good about it, and I know that KB, you caught this trade, didn't you?
Yeah.
This, however, was our shift. So we had first break here, and then we get our true break, just get our true break there. Okay. It could have been more convincing in terms of a true break. I think it's better on the 1 minute from what I remember. It could have been more convincing as a true break, but I think we have enough structure here, and you've got this kind of this weakening of highs. Okay, you've got this weakening of highs, weakening of highs, weakening of highs. That's enough for me to say, do you know what? Actually, this is one that you want to be getting involved with. Yes, you haven't got a really confident close below, but all of the other factors, bearish momentum, you've got liquidity levels down here as a really clear target. This is there could be, and I think most trades, you'll find reasons why it wasn't perfect. Look, perfection is something that we're all striving for, right? Very rarely are you going to find perfection in trading, okay? What you're normally going to find is a combination of factors that you're really happy with. We can trade an MSU1 on this one as well, which is good. So trade an MSU1. And then obviously we've got all the way down to 3.3. So let's just get that saved. Journal, back testing. So is it EURUSD? What day was that? Wednesday, 19th. Why is that being a weirdo? 30. Come on. 30. 3.3. Win MSU1. Okay, with momentum, key liquidity. I wouldn't class that as a key liquidity. It was just liquidity. Key time of day, shift, MSU, easy 2R. Yeah, good trade. Good trade. And it went all the way down, rocketed all the way down to like 606. Right, the green button. Move across. Put that in. Okay. Lovely trade. Could have cleaner TV, but all other factors there. I think we got involved, but definitely positions out there. Okay, get rid of that. And then I think that's pretty much it. I mean, again, another really good example, okay? So the market here at this point has shifted bullish. Okay, we're in bullish market conditions. You then get, and I'm looking at let's look at the 3 minute average out. You then just get this massive drop. So, you'd be trading a risk entry here. Okay, you trade in risk entry here. And, there is a reason why we look for confirmation in our moves. That's a risk entry. I wouldn't have found a position here. You then have 15 minutes bearish, and then you start getting this pullback. You start shifting, but the entire time you're stuck within this range. So you can't really trade anything till after here. So 15-minute shifts officially. There's your first break. And your true break, therefore, is there. What news do we have? Unemployment on Thursday, was it? Right, so we've had a 15-minute shift here. Let's see if we've got anything on this. 15-minute shift. And then you do it, to be fair, you have quite a nice MSU there, 3-minute MSU. And a really lovely engulfing as well. So that's a lovely position actually. Nice shift. First profit target. You probably have to use over here. That is a nice position, to be fair. So there is a position on Thursday. Did anyone catch the longs on Thursday? Linny, did you catch these?
I took it in London, didn't I? And I went B just in case it was going to continue bearish.
Yeah. Yeah, fair.
And then I marked that one up, but I didn't trade it. New York.
Okay, fine. Yeah, nice position that was, to be fair. Really nice. And then I didn't trade Friday, but if any of you watch my analysis, you'll know that I called it. I was pretty confident on the fact that we were probably just going to pull back for the day. Let's just log this quickly. It's 235, 235, and it was RRR 2.2 win issue 2. So with momentum, key liquidity. Yeah, because we swept down here. Yeah, key liquidity, key time of day, shift, MSU, easy to Okay, cool. Oh, shit. 0, what did we go up to? 0, 5.8. Not that. Come on. Shift was bullish. Didn't get an entry into the 15-minute range. Shifted in the and then yeah, the only other we had was this shift. So then we watched my analysis on Friday. My assumption is that we were going to probably shift bearish and pull back because we had this big bullish move. And when you look at it from an hourly perspective, the market hasn't actually shifted bullish yet. Why haven't we shifted bullish yet? Because it's a massive big move. Why haven't we shifted bullish?
It's just the first break. There's no true break. We don't have any structure
It's
inside it.
It's a very, very, very convincing first break. And that is definitely a warning signal. But ultimately, it is just a first break. We haven't shifted bullish until that's happened. Now we've shifted bullish. Now we can take buys safely. Okay. From an hourly perspective, we're talking about, remember, guys, okay? Because, we can still take buys up here because the 15-minute has shifted bullish. Okay. And that's the beauty of trading our higher time frames, is that the higher time frames, they give us that kind of that higher time frame momentum. But it doesn't mean we can buy and sell in any market conditions, which is why we can have sells and we can have buys. Your 15-minute time frame is the one that you want to be trading in line with. That's kind of your day-to-day momentum. Okay. This trade, that buy we took on the Thursday, would have been a counter momentum play because it was against the hourly time frame, the hourly momentum. But then if you zoom out to an even higher time frame, like the 4-hour, okay, you zoom out to the 4-hour, then technically you're maybe probably the 8-hour in this example to make it really clear. Okay, technically you're still within a bullish leg. So the momentum of where the market is flowing right now, you'll usually find on something like the 15-minute, which is why I really dislike trading against the 15-minute time frame. You can see here really, really bearish 15-minute, lovely structure. And the other thing as well is that when you're looking at the chart like this and it's difficult to read structure, one of the filtering processes that Sam and I have is if we can't read the structure clearly, we just don't look at that pair. We just ignore it. Whereas that 15-minute leg down here, we've got really clear bearish. And look, there wasn't great opportunities in that bearish leg, but you've got really clear ways to get in. You could have traded, and I think Matt took a couple of these, you could have traded like your higher time frame MSU setups. There were setups like that, but personally, I like my lower time frame confirmations. It gets me into tighter positions, gets me in and out of the marketplace. Okay, but when the market's moving like this, and it's like big rangy movements, there's nothing really in there. That big news sweep. Was there a news reversal maybe? Okay, we did have a news reversal. Was it Unemployment Friday? I think it was. So we did have a news reversal, to be fair. Don't quite get the 2R. Would I have taken that? Maybe, maybe not. Probably not, to be fair. But look, there's definitely a news reversal. Just quite a weak news. What have you done? You've grabbed liquidity from over here and you've tagged into. This is a perfect example of liquidity grading. Okay. So imagine that order block or that supply zone is like 30% of the liquidity you'd normally want. That imbalance gives you 30% of the liquidity, and then list liquidity gives you the other 30%. Okay, all of those things, all of those contributing factors together give you enough liquidity to reverse the market. News has come in, big old gap, which is unusual for news. A big old gap, it's shot up. We've had that news reversal. The trap would have been down here. No, it's what was that then?
I think it was like
245
retail.
news.
Wasn't it like retail sales or something like that?
At 245?
Oh, maybe not. No.
Don't know.
Yeah, there was news on Friday at 2:45.
Was there?
Yeah.
Yeah, that's an unusual one. But look, you can see the trade played out. I probably wouldn't have taken it. I don't really like trading Friday afternoon. Probably wouldn't have taken it. I wouldn't have been able to cleanly get my 2R out. I'm not sure what caused that anyway. For me, I'm normally waiting for the 1:30 news.
Oh,
yeah,
existing home sales check. Whatever that is.
Okay, fine. Yeah, whatever.
Yeah. Would you have taken that? Sorry, would you have taken that news continuation in London? The one I took. I just want to know your thoughts on it. Yeah. Because it pulls back into EPA, and then you get a shift in an MSU from like the EPA, and
honestly,
if you want to use your EQ
yeah,
the 15 range.
Honestly, probably not. To be fair, I would have probably, if I was trading, I would have probably looked at a buy, personally. Simply because the market's been really bullish up to this point. You've had like a weak shift, and that news, I wouldn't really class a news move as a shift. I'd normally class it as a liquidity grab. So I probably would have looked at a buy, to be fair. It could have gone either way, and that's one of the questions you've got to have for yourself. If it could go either way, then maybe you just stay out of it altogether. But yeah, look, you got your profits out, so it doesn't really matter.
Yeah, fair enough.
Right, cool, guys. We've run over a little bit today. Thank you for your time as always. Lovely to see you all. Tomorrow, KB, you're doing a markup for us, aren't you?
Yep.
Are you ready for it?
Yes.
Yeah, 100%?
Yes, I'll try my best.
Love it. Okay, good. Well, I'll be here. Don't worry. I'll be here to look after you, right? So look, let's try and get everyone on tomorrow to give KB support. And it's going to be one of your guys' turns at some point in the future. KB has been, I nominated him, to be fair, so I did pick on him. I'm sorry, KB. But KB, it's going to be a good session. It's going to be a good session. Nothing to be worried about. Okay, where these practical sessions are going to be really good for people's development, right? And everyone's going to have a go at them eventually. All right. I'm going to rally up the troops, KB, to make sure you got a really big audience as well. All right. Guys, lovely to see you all. Catch you all in the morning. Boot camp. Give me 2-3 minutes just to get set up and I'll be with you.
Cheers, guys. See ya.
Later.